This is exercise 13-11 on page 611, dealing with Treasury stock. We are asked to journalize the transactions of April, July, and October, and then also pull a balance in our paid-in capital account. So let's get started with Treasury stock. First, there are two tips that you can remember with working with Treasury. First, whatever it's purchased for, it must go out at. Remember that purchase price. And secondly, when Treasury stock is reissued, all overage or shortages goes to paid-in capital. So our first transaction on April 27th of the current year, Deer Creek reacquired 15,000 shares of its common stock at $60 per share. Remember, if we reacquire our own stock, it's called Treasury stock. So, how does a company purchase anything? If I'm purchasing something, what's going on? Cash is involved. So deal with cash first when you prepare your journal entry. I got cash, a credit of $900,000 because I purchased Treasury stock. I had to pay out cash. How did I get the $900,000? I took the 15,000 shares of common stock that was purchased at the $60 per share price to give me my $900,000 cash I had to pay out. Remember, if cash goes out or decreases, that's a credit because it's an asset. So what did I get for my cash? I got Treasury stock. That balances the equation. I'm going to put a note there. Remember, I have to remember what that Treasury stock was purchased at. I'm going to use that later. Remember the purchase price. That was tip number 1. Our second transaction was on July 13th. Deer Creek sold the 9,000 shares of the reacquired shares at $72 per share. I think I said shares a lot. So, once again, deal with cash first. If we sold stock, we're getting cash. People are giving us cash, we're giving them our stock. So cash first. If we sold 9,000 shares at $72, that's going to get us $648,000 cash. So we build our journal entry. This time we're receiving cash. Our cash is increasing, so we want to debit our cash. Okay, what did we give them? We didn't give up a building, we didn't give up land, but we gave up Treasury stock. So I'm going to credit my Treasury stock at what amount? Remember that purchase price? That's the only thing I can reduce Treasury stock by. So I take that same 9,000 shares times my $60 purchase price, and that gets me $540,000. So I got cash of $648 and Treasury stock of $540 so far in my journal entry. Oh, but what's wrong? My debits and credits don't balance. That makes me sad. So we're out by $108,000. We need a little bit more on the credit side. What was tip number 2? Any overage, in this case, is going to go to paid-in capital Treasury stock. We received more cash because we sold it at $72 versus the $60 that we bought it for. So we have an overage of $108, and we're putting that in paid-in capital Treasury stock. Yay! Our debits and credits balance. We can move forward. Our last transaction is 6,000 shares were sold at $59 per share on October 8th. So once again, deal with cash first. If we sold stock, we're getting the cash. How much cash? Take the 6,000 times the $59 that we sold it for, and we got $354,000. Once again, we're receiving cash, so it is debited. Once again, we gave up Treasury stock. How does Treasury stock go out? At that purchase price. So take those same 6,000 shares at the $60 purchase price, and that gets us $360. Again, what's wrong with this? Our debits and credits don't balance. This time we're only out by $6,000, but on the debit side, because we sold the shares at $59, and we had actually purchased them for $1 more at $60. So we're short by the $6,000. Where do all overages or shortages go? Paid-in capital. Now our debits and credits are in balance. Yay! The final question was, what is the balance in paid-in capital account? Anytime you're asked to pull a balance, prepare a T account. That's the quickest and easiest way. So just now record your debits and credits from the journal entries you prepared. On April 27th, there was no journal entry to paid-in capital. It was simply Treasury stock and cash. On July 13th, paid-in capital had a credit of 108. So I'm just going to post that in the credit column. Our October 8th entry had a debit of $6,000 in paid-in capital. So I'm going to post that in the debit column. Now, if I have 108 credit and 6 in the debit, that pulls 102 balance. So thanks for learning about Treasury stock.